What's going on, everyone? Welcome back to the Modern Mortgage Show, where I interview mortgage professionals who share their stories and modern information about the industry. I'm your host, Rocco, and I'm very happy to introduce my guest for today's show. His name is Tommy Lauer, and he's a mortgage broker at Range Lending out of Auburn Hills, Michigan. Tommy, welcome to the show.
Hey, thanks for having me.
Absolutely. Thank you so much for taking the time to be here. So, Tommy, why don't we start off the show? Just tell us a little bit about yourself and maybe give us a brief introduction of who you are.
Sure. I live in Michigan and been doing loans for probably over 15 years. I got my start at Quicken, like a lot of people here in Michigan. Spent some time as a President's Club banker and then also as a director of mortgage banking. And then probably about 6 years ago, I went and did it on my own and kind of do a little bit of both mortgage and real estate. Father of three boys, and we just got a new puppy. So really enjoying our quarantine now.
Awesome. So you said you've been in the industry for about 15 years now?
Yep.
So did you do any type of work before you got into the industry?
Yeah, I've been an entrepreneur since I was pretty young, I guess. My dad's always owned his own business, and I started working for him when I was, right out of high school, basically. So I've just kind of been in the family business, and then I went to college, got a degree, and kind of worked that 9-to-5 job for a big company for a year in Tampa, and just realized that I like to be the captain of my own ship. So I've always done kind of, I don't know, small business stuff ever since.
So what type of business did your dad own?
He owned a automotive consulting business. He would consult with auto dealers throughout Michigan, and we had some products that I was kind of in charge of running for him on a national level. So we had a program that would help mechanics save money based on the tools that they bought. So
Cool.
kind of a niche thing.
Yeah. So what made you want to get into the mortgage industry?
I didn't want to get in the mortgage industry. I'd be shocked if I ever met somebody that said, when I was a little kid, I wanted to grow up and do mortgages.
Yeah.
But I had just sold my business to pay off some debt that the business had accumulated. So I was pretty much jobless. And I had my first child on the way. And although I was living 2.5-hour drive from Quicken, I still applied there and went in and saw the culture and kind of fell in love with some of the people. And I bought into the company, which just, they just happened to do mortgages. So that's what hooked me was the whole Quicken environment and the people that I met there. Some of the best, smartest people that I've ever met. So.
Yeah, absolutely. So as we all know, we're in a very weird situation and time as of now. So what are you guys doing? What are you seeing right now in the industry, and what are you guys doing to get past this uncertain period of time?
So, we just looked at our Q1 results, and oddly enough, we're pretty much a purchase shop, right? So, I work really closely with a real estate company called Real Team Real Estate. They've got about 80 full-time agents here in Michigan area, and we are definitely their in-house or preferred lender. So the thing that I've noticed was, when we got that rate drop, maybe a month ago now, or even at the beginning of the year, we started doing a lot more refis than normal. And our mix is usually 80% purchase, 20% refi. That kind of flipped. Where we did like 60% refi and then the other 40% purchase. So, that all just came to a screeching halt. I feel like, we do a lot of loans with both Quicken and United on the wholesale side. And, when the stay in place orders started to roll out, you could see that pricing just got so wacky. I mean, and it still is, before I hopped on here, I was pricing out a refi for a client, and, there's literally 2 points different for the same exact rate between two lenders, which it's the bond market is really weird right now. And I think lenders are really scared right now. We're seeing overlays coming in at us really furiously. So it's just getting weird. But, I went through this before in 09.
Mhm.
And it's just kind of like a storm, the storm comes and you weather it, you get used to it, then it passes and the blue skies come out again. So I'm not
Definitely.
worried about it. It's just kind of fun watching the whole thing happen.
Definitely. So you are in a broker shop, correct?
Yes. Yep.
Okay. So for the viewers watching, can you explain what a broker shop is and what are the advantages to it?
Sure. So when I talk about I used to work at Quicken, that's more of a retail shop where I was just a banker for just Quicken Loans. So
Yeah.
the money that I was selling to you or my client, that money came directly from Quicken, right? So they're a direct lender. On the broker side, I'm kind of, everybody hates the term, but truly is. I'm a middleman. I'm in between the client and their source of funds. The benefits to that, there's a lot of benefits. One of them is, like we talked about before, is just pricing. When I was a banker at Quicken, the price was the price was the price. That's all I could offer you. That's
Mhm.
it. When I now talk to you as a broker, I literally shop. I pull up my pricing engine. I've got 5 different lenders that I price out a scenario for, and I can just tell you today this is the one to lock with because this one's better. So just the options and pricing, and then also the options and programs. So um, when you write loans just for one lender, you can be limited on the types of programs you can write. Not all borrowers fit into that, conventional conforming 20% down loan. So with purchases, you need to be a lot more flexible in what you can do because it's not about the loan; it's about the real estate transaction and getting the person in the house. So I like being a broker just because of
Mhm.
pricing and the programs mix that I can offer.
Yeah. In terms of pricing, I always say it's kind of like, say like you're working at like a grocery store, so the retail lender can only offer you the price of the bananas that they offer, but you have 10 different grocery stores that you can check the prices for the bananas. So that's
Exactly.
kind of an easy way to think about it.
Exactly right. Yep.
So what would you say now is the most fulfilling part or rewarding part about your job?
Um, it's a good question. I'm pretty grateful for a lot of things. The first thing I'm grateful for is just the this profession itself, just writing loans. I don't care if you're a direct lender, who you're doing it with. The job of a loan officer is pretty rewarding in itself, just from it's financially rewarding. It's very flexible. So even though we do kind of have to work somewhat retail hours because we got to talk to people when they're not at work,
Mhm.
there's still a ton of freedom. Like, you can went on a vacation with my wife a couple of weeks ago and put 2 loans in while I was in Key West. Right. So it's that part is really rewarding to me. But I mean, it's just, I have 3 kids now, and it's what I've done to buy my houses and feed my kids and all that. So, um, I guess one more reason why it's rewarding is definitely on now that I work really closely with a lot of first time home buyers and purchases because
Mhm.
of Real Team Real Estate.
Yeah.
It is really rewarding to sit at that first closing when someone gets their first house and, kind of walk them through the mortgage process, and maybe their credit score wasn't so good. So you work on getting it bumped up a little bit. Like, that whole process is pretty rewarding, watching, someone execute on a dream that they've always had of owning a house. And, also helping out these newer agents, like taking a new real estate agent kind of by the hand and saying, look, I got you, let me help you build, start your career. And lending's such a big piece of that. And a lot of real estate agents um, just don't pay enough attention to that, I guess. So it's rewarding to watch those newer agents develop as well.
Absolutely. So shifting gears here, when you first started 15 years ago, right?
Yep.
What were your biggest struggles or obstacles you faced early on?
The drive. I literally lived 2 hours one way away
That's
from
insane.
the office. I don't know if you know Michigan, but I lived in Lansing, and Quicken was in Livonia, which is about an hour and 45-minute drive. And your first year at Quicken, back then anyway, I could liken it to like your first year in law school, I guess, where it's like super, super intense. You've really got to commit, at least 6 days a week, probably 10 to 12 hours a day, to be successful. So that drive was challenging, but that drive was also an opportunity for me. It was 4 hours a day in the car where I could listen to audiobooks, listen to sales stuff, and like just really dial in. So it's like, sometimes your biggest curse is your blessing. So that was tough in the beginning, was the drive.
Okay, so let's say you were talking to, your younger self, or even someone just starting out. What advice would you give to them other than driving 2 hours? Don't drive.
Yeah, right. So someone that's like new into mortgages.
Yep. Are just starting out.
So a couple pieces of advice, because I know those people. I mentor some of those people, and the number one is just you have to time block your day, right? Because prospecting is something that you must continue to do. You're never going to get to a point in your business, in my opinion, where you don't need to prospect. Now, prospecting could be calling people you already know, and it doesn't feel like prospecting because you're not cold calling, but definitely in the beginning, if you're not committed to talking to at least 20 new people a day, it's going to be a real tough grind, especially if you're a broker, right? You're not getting leads fed to you. It's going to be really tough. So allocate at least 2 hours a day to prospecting. Try to talk to 20 to 30 people a day, and do that for a solid 2 years. And if you can do that, you're going to have a very successful mortgage career, in my opinion.
Awesome. That's good advice. So in recent years, technology has really made its way into industry. So how would you say this has affected you and your business?
Oh, wow. I look back at those beginning years when I was writing loans, and I'm like, man, if I had the tools that I have now back then, it would have been amazing. So I was blown away 10 years ago, 15 years ago at the e-signing process. I'm like, wow, I don't have to send out a package. My client signs it and papers come back, So that was cool. But now you've got things like I said, just before I jumped on, like I used to do a lot of selling on the phone and having people write stuff down. And now I don't know if you're familiar with Mortgage Coach, but it's such a great program. It's like such an easy way to lay out, like, here's your current mortgage, here's this option, here's this option, and you can do a video, and like, it's just, that technology is cool. The pre-app 1003 is awesome, for just getting your application out to somebody, having them do a quick 1003 and pulling credit. Like, I didn't have that stuff early on. Everything was on the phone, and then I'm typing stuff in. But now a lot of this is self-serve. You can be like, oh, you're interested? Cool. Fill this link out. Oh, you just want more information? Cool. I did a presentation. Take a look at this. Like, it's more on demand.
Yeah.
You know what I mean? And I love the technology. I embrace it. And we're constantly trying to find new and better ways to, basically make the process easier for our client.
Yeah, and that's what it's all about. It definitely, enhances the experience and just makes the stuff that was that took a lot of time just automated and quicker. Yeah,
less friction too. So if I want to get a mortgage, and I work, I'm here in Detroit, so I work at General Motors, and I work a shift that is, I get out of bed at noon and come home from work at midnight, right? So like, if you do everything over the phone and you have to have an appointment with that guy, like, it's just not going to happen. You know what I mean? That's going to be hard to transact for that guy. So you got to go to his level and like make everything on demand for him. And then you'll start to get that business. So that's what we're trying to do.
So are there any modern strategies when it comes to technology or social media that you guys are taking advantage of in terms of scaling production or maintaining better relationships, or even just systemizing and organizing your business?
I mean, yes. So, everything we do, all of our processes, which it's kind of a lengthy process when you look at taking a loan from credit pull all the way to the closing table, especially when you're dealing with 4 or 5 different lenders. It's hard to keep it all like together. We don't even use a loan origination system, oddly enough, right? Like we don't use Calyx Point. We don't have any centralized hub. Everything we do is something that we've created on Google Sheets or Google Forms. Like we basically just kind of like painted a picture of our own process and created everything instead of buying something off the shelf. That's got its benefits, it's got its drawbacks, but that's how we do it. And it seems to work for us pretty well. So I embrace technology in terms of that, like you can make it do whatever you want it to do as long as you're willing to learn and dig in a little bit. A lot of people like the off the shelf stuff just because it's easy and it comes with a video, but I kind of like, the stuff I get to build on my own.
Okay, so where would you say that you see all of this going in the future in terms of technology and the way it impacts the mortgage industry?
So I feel like we're going to see a lot, not just because of the COVID thing, but just because it's time. I think we're going to see a lot more, or a lot less of appraisers actually walking into houses. I think that appraisal piece is going to be a lot more streamlined. I think the verification of income is going to be a lot more streamlined. I just think you're going to start seeing these systems start to connect with each other.
Yeah.
In a way where you can't really commit mortgage fraud because the information is not coming from you, the borrower, anymore. It's coming from this repository of everybody's paychecks, right? Or whatever it may be. I just think you're going to see more systems talking to each other, which makes the process kind of less hackable from a mortgage fraud standpoint and just easier for the client. We're seeing a lot of that. I also think you're going to see more portals where, the client kind of has their like their Credit Karma app or something like that, but then they've also got their pay information in there from their job. They've got their banking coming into this system. And then when they're ready to do a loan, they just basically flip a switch. And now me as the loan officer, I can have access to all that. But it wasn't me pulling that info from them. It was them taking care of it and owning their own data and then deciding to let me have it when they want to move forward, if they do. You know what I mean?
Yeah.
People are going to take control of their data back in a stronger way.
And processes are going to be more streamlined and, automated.
There's no doubt. They're getting more streamlined every day. It's great.
Yep. Okay, so let's transition to the buyer side now.
Okay.
A few questions on that. What do you see as the biggest misconception or fear that your clients have before working with you?
So this is outside of the whole COVID thing, right?
Yes, in general.
Yeah. It's a great question. I don't really know, and maybe I should because I don't ask my clients, that part. But I deal with a lot of buyers that are not just 20% down conventional. I have those buyers as well, those clients as well. But a lot of my clients are, typical FHA 3.5%. They don't have a ton of money.
Yeah.
They're concerned that they're gonna spend too much money for a house. It's not a good time to buy, right? Why am I doing this right now? So I think they're just scared of the things that most people are. It's a big investment. Am I doing the right thing? Am I getting the best rate? So it just comes down to trust.
Yeah.
The biggest concern is when they don't trust you, and you just have to get them to trust you. And I think the only way you can do that is just being real.
Would you say a big misconception is they think they need a huge down payment, or they think they need the best credit?
Yeah, maybe I feel like we as an industry have done a pretty good job of letting people know that 20% is, it's a nice standard, but it's just not the requirement. I mean, how many ads do you see that are 0% down and 3% down? So I think we've done a good job as an industry of letting people know that the 20% down payment is not a thing. But I think another big misconception is like the self-employed people. A lot of those people that really can get a loan don't just have been denied before because they're self-employed, and so they don't even try anymore. I think that's a big misconception, is a lot of those self-employed people just thinking that it's going to be too hard or it's not possible to get a loan.
Interesting. And you mentioned that you work with a lot of first time buyers.
Yeah, I do, because the real estate agents I work with are typically younger, 10 to 15 years younger than me. They're in like that late 20, early 30s stage,
Mhm.
which I love working with agents like that because their sphere is all buying houses right now. But yeah, most of those people buying houses are going to be around that age, and it's typically their first house. Some of them it's their second house, but
Yeah.
yeah, typically I'm helping them with their first home purchase.
So advising them and educating them throughout the whole process.
Yeah, so I'm big on foreshadowing the process for people on that first phone call. When I meet them, they usually are referred to me, which helps with the trust situation a lot.
Hmm.
But then, that's just your little foot in the door. Like, then
Yeah.
you really just got to show who you are. And I use a lot of video to do that. Like, if I could make a phone call, um, but it's just kind of like delivering information, I'll just make a video. I'll
Yeah.
make a quick video on my phone and send the video instead of a text or a phone call or an email. And I don't know why, but I feel like people are just appreciative of that. You know what I mean? They like that.
Yeah, and it's because it's more personal, and it seems like it takes more effort. But really, texting does, pulling out your phone, and you're talking about like a selfie video you sent to them.
Yeah, just a selfie video. Like, hey, just got good news. Your loan's through underwriting, and we only need these conditions.
Hmm.
So call Megan the processor if you could. Just like that normal voicemail that you would typically leave somebody, or a text. I do a video
That's awesome.
just
So,
because.
so what is the number one most asked question that you receive from first time home buyers?
Um, I think a lot of them ask me, "Is this a good deal?"
Hmm.
Like, is it going to appraise? Is it going to appraise? Am I doing the right thing? Really, it's kind of a higher level question.
Yeah.
It's not typical, especially on purchases. I mean, these people really don't shop. When it's a referral and it's on a purchase, like it's different from a refi, right? A refi wants the best rate and the lowest cost. I get
Yeah.
it. A buyer wants a house, and they want to know that it's going to appraise. They don't have to pay more money than they were told up front, and that they can move in when they need to move in. So it's a different set of concerns that buyers have. And I think the number one is just overall, like, am I making the right financial decision here?
Hmm. Yeah, and that really comes down to finding the right broker that, like we were mentioning, that educates them and advises them throughout the whole process, because there really isn't a one size fits all product. Everyone has their own needs and specific situation.
Right.
Well, Tommy, I really want to thank you so
Yep.
much for coming on the show today. I had an amazing time speaking with you, and I really, really appreciate your time.
All right, Rocco. Thanks, man.
And thank you to all the viewers for watching, and we'll see you again next episode.